Morning, everyone. I'm Kristen Myers, editor-in-chief of ETF.com, here with your market minute for Wednesday, May 7th. So we have three pieces of news that are moving the markets today. They're going to be earnings, the U.S.-China trade war, and of course, Federal Reserve decision day on rates. So let's start up with what we're having with earnings. Disney reported earnings and beat on top and bottom lines with a surprise jump in their streaming subscriber numbers. Now, here's why investors care so much about Disney's earnings. Disney is really thought of as a bellwether company, meaning that it is a leading indicator of the economic health of the United States, and it also is an indicator on consumer spending, particularly in consumer discretionary. So let's take a quick look at consumer discretionary right now. That is going to be ticker XLY. It is up about 1% right now. And Disney stock, I can see based on the stock page at ETF.com, is up over 9.5% in early trading. So it is, of course, boosting the entire S&P 500, of which it is a member, and of course, any ETF that has Disney as a major holding. Second up is going to be that U.S.-China trade war. Treasury Secretary Scott Bessent announced that him and his Chinese counterpart would meet each other in Switzerland this week. And it's the first time that U.S. and China have agreed to meet, particularly around the issues of tariffs and the U.S.-China trade war. And investors are, of course, hopeful that with those two officials meeting, that some kind of trade deal can be cobbled together going forward, which would reduce inflation in the long run and also make it a lot easier for importers and therefore consumers like you and I to start buying goods that are brought in from overseas. The last thing that investors are looking at and markets are really paying attention to right now is going to be the Fed. All eyes are on the Fed today because we are awaiting their decision on rates. Now, according to the CME FedWatch tool, 99% probability that investors in the markets have really priced in that the Fed is not going to cut rates or raise rates, but hold rates steady. Now, looking at the next couple of months, investors in the markets do not believe we'll be receiving any kind of rate cut until July. So we'll have to wait until the summer for any kind of movement on rates. We'll, of course, be keeping you updated on everything to do with the U.S.-China trade war, the Federal Reserve, and, of course, earnings. So be sure to like, watch, follow, and subscribe to ETF.com.